That's what I've been saying. 50 is the support for silver. Now, it can trade below it, but that's really where the support is. That doesn't mean it can't trade 49 or even 48, because silver is inherently pretty volatile, and so it's hard to stop at a round number. But this is about the support. Gold, 4,000 is key support, and we've managed to go below it, but not by much. Gold never went below 3,900 after it went above 4,000. The lowest I saw was maybe 3,910 or 3,920. Silver did go below 50, but then it came soaring back. I mean, when silver almost hit a new high on Thursday night, gold was still maybe $200 away from a high. Gold got, less than 200, but because gold got back above 4,300, I think. But after today's sell-off, it's back below 4,100. But this is very constructive trading as far as I'm concerned.
This week, precious metals staged another turbulent but bullish performance. Gold held above the psychologically critical $4,000 level despite sharp intraday swings, finishing the week with solid gains, while silver briefly surged above $54 before closing back over $50. Trading action highlighted intense volatility between Asian buying, which drove overnight rallies, and heavy selling during U.S. market hours, yet both metals continue to outperform risk assets like tech stocks and Bitcoin. In this video, economist and money manager Peter Schiff breaks down why $4,000 has become key support for gold and $50 for silver, arguing that recent sell-offs are merely buying opportunities in a long-term bull market. He explains how global inflation, Fed policy uncertainty, Trump's tariff dividends, and the unwinding bubbles in crypto, tech, and housing are pushing investors out of risky assets and into the real safe havens: physical gold, silver, and quality mining stocks. Let's watch clips from Peter Schiff's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Well, we had another positive week in precious metals, but it wasn't without a lot of volatility, especially over the past two trading sessions that saw wild swings in the price of both gold and silver. But despite those wild swings and today's big drop, gold still managed to gain 2.2% on the week, and silver rose 4.7% on the week. Most significantly, gold is above 4,000. It closed at about $4,000 or $4,080, and silver ended the week back above 50. But intra-week, on Thursday night, it got above 54. In fact, silver almost made a new record high. It was about 25 cents away, and that's when the volatility started. And the volatility all started in our time zone. And that's, interesting in and of itself. The big rallies mostly occur during Asian trading hours. The big sell-offs happen in U.S. hours, or, late European, early morning U.S. is when you see all the selling. A lot of it is before the U.S. stock market opens, usually within an hour or two before the opening bell. They hit the metals hard. And that's what happened on Thursday and Friday. But it shows you that a lot of the buying is coming from Asia, right? They're buying gold. The selling and the speculating against gold is happening in our time zone. But on Thursday, we had gold up over $50 in the evening. And then in the morning, it was down $50. Silver, which was up over $1 in the evening, was down over $1 in early morning New York trading. Then last night, silver again soared over $1. Gold was up over $50. And then near the open of our market, or just before, there was a huge sell-off, and gold dropped like $130, $140. Silver dropped over $1.50, not from the high, but went from up over $1 to down more than $1.50. So more than a $2.50 swing in the price of silver between the time U.S. markets closed and U.S. markets opened. But I think what's the most significant about all of this volatility is that it's taking place above 4,000 for gold and above 50 for silver. That's what I've been saying. 50 is the support for silver. Now, it can trade below it, but that's really where the support is. That doesn't mean it can't trade 49 or even 48, because silver is inherently pretty volatile. And so it's hard to stop at a round number. But this is about the support. Gold, 4,000 is key support. And we've managed to go below it, but not by much. Gold never went below 3,900 after it went above 4,000. The lowest I saw was maybe 3,910 or 3,920. Silver did go below 50, but then it came soaring back. I mean, when silver almost hit a new high on Thursday night, gold was still maybe $200 away from a high. Gold got, less than 200, but because gold got back above 4,300, I think. But after today's sell-off, it's back below 4,100. But this is very constructive trading as far as I'm concerned. 4,000 is the new 3,000, just like 3,000 was the new 2,000. And silver, when silver was at 40, I said 40 was the new 30. And now it's almost like 50 is the new 40. Yes, silver did go below 40 a few times before it rocketed up to 50. And that's why it may go back below 50, especially when we're only 60 cents away. But I wouldn't wait. I think that today's sell-off was another buying opportunity. So the most riskiest assets are getting sold and people are moving into other assets that have less risk. They don't want to move into bonds, right? Because the old safe havens are no longer safe anymore when you have inflation as the primary risk and a dollar debasement. That's why Treasury prices were also down today and down on the week, and yields are rising. But we saw moves down in tech stocks. Tech got hit pretty hard. In fact, the NASDAQ was down about 4.5% on the week. In contrast, look at gold and silver stocks. The GDX was up 5% on the week, almost as much up as the NASDAQ was down. And the GDXJ almost up 5% as well. Now, of course, these gold and silver mining stocks would have been up a lot more without the losses from today and yesterday, right? And so it could have been a much bigger move. And I think it will be a much bigger move next week as the rotation out of risk continues. Bitcoin itself was down about 9.25% on the week, cracking decisively below the psychologically important 100,000. We are trading now at just above 95,000. The low that I saw intraday so far was exactly 94. Bitcoin treasury companies, Bitcoin exchanges, the whole thing is imploding. But not only is this good for gold in that it's going to, put gold, back in front, right? It was on the back burner. Everybody was focusing on Bitcoin because, Bitcoin is better than gold. Bitcoin is gold 2.0, right? It's doing so much better. Well, clearly gold is doing much better than Bitcoin. And so the conversation is changing in favor of gold. It's get rid of your fool's gold, buy real gold. So that's bullish for gold because money that was being diverted into crypto can now go back into gold because investors want less risk. Bitcoin is more risk. Bitcoin is about the riskiest thing you can own. So if you're trying to de-risk your portfolio, right, you don't want Bitcoin, you want gold.
Gold and silver just closed out another explosive week, with massive volatility but strong overall gains. Gold held firmly above the crucial $4,000 support level despite sharp intraday swings, while silver briefly pushed above $54 before settling safely back over $50. Asian markets fueled most of the rallies, and U.S. hours delivered the heaviest sell-offs, but the metals still outperformed tech stocks and Bitcoin, signaling a powerful shift towards safer assets. In this prospect, economist Peter Schiff breaks down why these price levels mark the new floor for gold and silver and explains how inflation, tariff policies, and collapsing risk markets are accelerating this move into real money. Let's get into the interview.
One of the factors that is hurting the risk stocks is the fact that a rate cut in December is no longer a sure thing. It's basically a coin toss at this point based on a lot of comments made by FOMC members that they're not really sure, what they're going to do with rates. And so that was hurting risk assets. But it's interesting money flew into gold and silver, even though they're talking about not cutting rates. People think, oh, that should harm gold and silver because, gold and silver want interest rate cuts. But because they may not cut rates, investors want safe havens, and that's gold and silver. And by the way, it doesn't matter to gold and silver if the Fed cuts rates or not. What matters is they're not raising rates, and they should. Interest rates are too low. They were too low before they were cut. They never should have been cut. And because they were cut, and because everybody knows the Fed's not going to hike, no matter how high inflation rises, well, that's bullish for gold. A couple of things that happened during the week that I forgot to mention. One was the announcement that we got on Sunday, which is one of the reasons that I think gold gapped up or opened over $100. I don't know if it gapped up, but it closed up over $100 on Monday. So we had a $100 rally. But one of the reasons for that $100 rally was Donald Trump floated the idea that everyone's going to get a $2,000 tariff dividend. Every person, not even every household, except the rich, right? Except the high income earners. So probably 95% of the people are going to get $2,000 checks, according to Donald Trump, which means, a family of four is going to get $8,000. Well, where's that money going to come from? Well, according to Trump, it's just coming from like manna from heaven. It's like a gift from the gods because it's coming from the tariffs. Well, first of all, the tariffs are paid by the same people that Trump wants to give a tariff dividend to. In fact, he let the cat out of the bag. I did mention this on the other podcast, but I got to throw it in again. But there was more news on that today. Donald Trump is now promising to lower tariffs on coffee, on bananas. Why? He says that this is necessary to lower those prices. Coffee prices are high. Banana prices are high. So Trump wants to lower the tariffs to lower the prices. Well, wait a minute. If lowering tariffs means prices go down, then raising tariffs means prices go up. So if Trump is admitting that he can lower prices by lowering tariffs, that's an admission that tariffs cause prices to go up. But the point I want to make on these rebates is they're inflationary. They're good for gold. Where's the money going to come from so that these, tariff dividend checks don't bounce? What the Trump administration is trying to do is make it worse, but flooding the economy with more cheap money to sustain a housing bubble is bullish for gold and silver. It's just another development on the week that is going to drive more money into gold and silver out of US dollars. Look, this whole bubble is deflating in crypto, in AI, housing, right? In the bond market. Look at bonds getting beat up, and they're doing whatever they can. They have to stop. I mean, they don't have to, but as far as they're concerned, they have to, because they can't allow a recession or a financial crisis, even if in the long run it's something we need. In the short run, they don't want that, right? The Trump administration, all they care about is making the economy look good until Trump leaves office. The last thing they want is the bubble to deflate while he's still there. But since the president's family is all in on crypto, they're obviously going to try to do what they can with cheap money. And so all this is going to drive the dollar down. Surprised it hasn't already dropped. But it's going to drive gold and silver prices much, much higher. So as I said earlier in this video, a volatile week, but all the dips were buying opportunities. Don't be afraid, right? A lot of people, they see this volatility and it scares them out of the market. At some point, $100 drop in the price of gold is not going to be very much. It already is not that much when you're talking about 4,000. But wait till it's 10,000, right? Then $100 is an even smaller move, 1%. And the volatility in silver, I think it's all a positive. It's all a sign of a breakout, but it is keeping some investors who might otherwise buy on the sidelines while they watch as speculators as the market keeps going up, and they're too afraid to come in. At some point, that fear will be replaced by greed. We're not there yet. All of the greed is still in Bitcoin. Now, eventually, that greed is going to turn into fear. And that's when the bottom is going to fall out of the crypto market. We're not even close to the bottom yet, right? We got a long way to go down, but we have a long way to go up in gold and silver. And, as more and more people have confidence in gold and silver, they're going to lose confidence in Bitcoin and the rest of crypto.
As we wrap up, it's clear that the turbulence we're seeing across markets is more than just noise. It's a shift in confidence, with volatile swings in precious metals, weakening risk assets, rising yields, and cracks forming in crypto and high-flying tech. Investors are beginning to rethink what safe haven truly means. Peter Schiff's analysis highlights a deeper trend. Capital is quietly migrating toward assets with real, lasting value. Whether it's gold holding firm above key levels or silver pushing toward new highs, the message is the same. Opportunity favors those who recognize strength beneath the volatility. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.